Hi, folks. Today is October the 3rd. It's currently about 9 o'clock in the morning. As you can see here, we are in the fxsimplifier trade room. They have one order pending on the AUD Swiss franc, and we also have one order actually entered on the USD CAD. Let's go ahead and focus on that right now. Let me see if I can find that here. All right, it doesn't look like I have that chart up, so we'll go ahead and pull that up here. All right, this is a buy. Let's look at our stop here. All right, so it's a 47 pip stop, 56 pip take profit. We'll go ahead and watch this, and I'll go ahead and jump into the trade room so we can see what they're talking about.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
However, that's something I'm interested in seeing. Very important, another data point we have tonight. Reserve Bank of Australia rate decision, 11:30 p.m. Eastern Time. So just before midnight tonight, we have AUD, Reserve Bank of Australia rate decision. That is huge importance in my view, just in terms of its potential to move price. And 30 minutes after that, we have this New Zealand dairy data. So, boy, if you're trading AUD NZD tonight, you better be aware of that, because you got two high importance data items for those two pairs. But that is those are certainly the most important items on my list here in terms of data to be released within the next by midnight tonight. Essentially, you've got 11:30 p.m. and 12 a.m. data points, hugely important. By the way, we have we're 1 hour into the NY PIP room. We have data at 10 a.m. Eastern. That's ISM data. So that is our data point this morning that certainly bears watching, and we will we'll certainly be cued in to that in an hour or slightly less than an hour. In terms of how this AUD-CHF is faring, just continues to base. There is the possibility that this won't be able to break out with the Reserve Bank of Australia data looming, the rate decision, I should say, not data really, but the rate decision looming tonight. However, it is a very compelling base, so we will certainly consider it if it breaks out. It is our pending idea. Euro US base, nothing official there, but that is another one that is basing quite well. So I've gone through my third swing idea that I like a lot. Okay, AUD CAD. I've already talked about Euro Pound, Euro Kiwi, and Aussie CAD. This very nice pullback. I happen to love Aussie Swissy as well. That we have our pending intraday trade on that, just waiting. But this is in a large triangle, and it's been basing fairly narrowly as well. This bullish bar has not been violated on a closing basis. It is held. It's above this rising 20-week moving average. It's just consolidating here. Ultimately, I think it is going to challenge this upper boundary. And so that would be a breakout we would see on the daily in a big way, I believe. So that is another pair I like a lot. I don't think it's as necessarily as imminent. So it was a watch idea for me this week. But in terms of the larger breakout, I don't know if it's ready this week. Of course, we never know. But certainly Aussie CAD, I think, is a more imminent type of idea that could be compelling. My last one was hoping for just one more day down in Aussie Kiwi. And did we get it? No. Moving up today. I just wanted one more day down into this area between the rising 13 and rising 20 MAs, right into maybe just the 38.2% retracement level, any kind of just normal shallow pullback. This isn't this is under a non-normal accumulation. I mean, this is just so far has not pulled back hardly at all. It stalled for 2 days, ran higher. 2 days down at the end of last week, looked like maybe it could continue into this week. No, back up. So unfortunately, that one is less compelling unless it just goes sideways for the rest of the week, which is looking unlikely, at least at this moment. But a lot is going to depend on. This is going to look quite different, I think, tomorrow after these two crucial data points in Australian dollar for Australia and for New Zealand dollar. All right, so that really those were my focus swing ideas, and still are, for the most part, my focus swing ideas this week. Lots of watch ideas. Anything in yellow, especially daily and hourly, are my other watch ideas. Do you have a favorite pair or pairs this week, Tag? I mean, you mentioned you're looking for
dollar yen.
Dollar yen. Okay, let's take a look at it.
Probably. If I had to pick one, that's the one.
Interesting. So I have my own ideas about the yen and the way I'm starting to see the yen, which is weaker. And I know you've laid out the fundamental case for that, in a huge way in past sessions. But I'm starting to see technically that all these bearish daily patterns where they're descending triangles and a lot of these yen pairs. Starting to look like that's not going to get fulfilled. For instance, that these breakdowns aren't going to happen to the downside, that they're actually going to happen to the upside. And a lot of these pairs will look not the same, but there will be some similarities. So, all right, but here I ask your opinion. I'm hogging the mic. So what are you looking at?
No, I agree on that. I mentioned, it's probably last week, in the past couple weeks anyways, that there's a decent chance of it moving, at least for our time frame, pretty decent either direction. And if I had to go, with the classic desert island trade, if you had to put on one trade and you were going to see the markets for the next 3 years, 5 years, 10 years, what have you, what would you put on? If I had to do one for the next 2 or 3 years, probably 3 years, I'd be willing to put on dollar yen long. But that doesn't mean in the meantime it can't have quite a bit of volatility, right? That's being on an island with no data. So, a break below 100, for instance, on dollar yen, I could see this going down to 95-ish within a few weeks or a month or two. That said, I think there's a lot more upside on if it breaks out to the upside instead of, 500 pips is an awesome game, don't get me wrong. But it wouldn't be in a straight line. I'm just saying I could see that, within a quarter, I guess that'd be fair. Within 3 months, probably within 6 to 8 weeks, something like that. But if it breaks out to the upside, I think I could run and run and run and run. And as you said, the chart itself has been, and across the yen pairs, has been getting slightly more and more bullish to the upside, right? So bullish dollar yen, bearish yen. And I agree with that, that the chart seems to be acting better and better toward the upside. And that 100 level on the downside has been pierced a few times, but nothing. It hasn't even had a close. It hasn't had 2 closes below the 100 line. I think it's had 1 or 2 closes total, but it hasn't had 2 in a row. If it closes below, the next day it breaks right back up through. It hasn't had a really good break. I'm actually working on a definition for a definitive break, because we talked about that last week too, how, if something pierces something by a pip or two, it might trigger a trade. That doesn't mean, that the previous pattern's 100% invalidated, right? It doesn't help the pattern, don't get me wrong. But I've been trying to play with, I was actually playing with that over the weekend, 20% of an ATR up to about 1 ATR. Somewhere in there, I think, for me, will be my definition of what's a definitive break. But either way, I see this shaping up more and more toward the upside. I'm looking for a breakout, not breakdown. Though, whatever, by the end of the week, we could have a breakdown pattern. I don't see that happening, but it could. For sure, by next week we could if it wanted to shape up that way. But for now, I'm seeing it break up to the upside. Because you're seeing, what you're seeing right here in dollar yen, you're seeing in almost everything yen. Pretty similar pattern. This one, it was a descending triangle instead of a symmetrical, right? So what's the difference? On a descending, it's kind of pointing more down. On a symmetrical, it's kind of pointing either direction, right? And then on a ascending, it's pointing up. But on the yen pairs, we're seeing a lot of descending and a lot of symmetrical triangles, and they all seem to be shaping up more and more to the upside. A few weeks ago, there's my trade, short euro yen. and it broke down and whatever. But since then, it broke down and actually went decently far, but it didn't break the bottom of the pattern. And then since then, it's been rebounding, and it's been rebounding pretty well. And so that one is not looking amazingly bullish, but the bearishness has sure been subsiding. It's been going away. So even the charts that did kind of break, or did break for that matter, did break down. They didn't break down all the way, and they've been recovering since. But most of them are looking more like dollar yen right there. But on dollar yen, the lines are so defined that I don't know. That's a very clean pattern right there.
You know what I want to do? Great thoughts. I don't have ADX on this chart, so let me just add this really quickly. No. Charting problem. My charts might have to close. All right. Well, Tag, can I give you presentation control for a minute?
Yeah, just a second.
Yeah, tell me when you're ready. Sorry, folks. I have to.
I am ready.
Happens. Okay. All right. Beautiful. Thanks. Don't do this very often, so bear with me. Make you presenter. All right. So, folks, I'm going to resolve my chart problem.
Chart?
I see it. Yep.
Awesome.
It looks good. All right. So I will. I'll take this back in a moment. Go ahead and obviously talk about whatever you want while I resolve my TradeStation issue here.
Okay. Yeah, you can see what I have drawn here is similar to what David had drawn on his. And basically, he has his uptrending line as well. And from down here, so this line. Just the cleanliness of this pattern. Like within ticks of everything, not within tens and 20 pips, but within like 1 or 2 pips, all these lines intersect really well. And in fact, if you go, to a daily, let me zoom in a bit, from up here on down, from this one, you get very similar, same thing. And actually, we've kind of had it, let me draw another line, give or take a little bit. Yeah, I'm not trying to fudge the lines too much, but I'm just drawing it quickly. So we've had this downtrending channel, right? Then, it hits that 100 level. It was able to pierce it for a moment there, right here. And then it hit there, here, it broke down. Then the next day it closed up. Then it's just been resting on there. And every time we get close to it or get to it, you can see the action. This is exactly at 100. By the way, if you don't know this, on MT4, so you click on it till you see that little, I don't know if you can see it through yours. If you click on the line, you'll see that at the edges, it gets a little circle. That means now you can either move it up or down or change it. You can go to horizontal line properties. You can actually put and define numbers. You can change the color, what have you. It's a nifty thing. That's exactly 100, and then there's your downtrending lines, and they're all right where we're at. And I don't know. I see this thing.
All right, folks. So now at about 13 minutes in, we have a really nice trade set up from what I can see here. Hopefully by the time we end today's session, this particular trade will have gone up a bit closer to our profit target there. And we'll come back and see if they actually enter another trade. All right, I'll be back with you guys a little after 10 o'clock. All right, folks, it is now 10:15, as you can see here. And we have one open trade, AUD Swiss franc. So that trade did get entered. But our USD CAD has gotten pretty close. It's looking good right now. Let's also go ahead and take a look at our AUD Swiss franc trade. Let me see if I can find that down here. Here it is. Let's pull that over a little. All right, so they haven't put in a target on that one yet. Let's go ahead and take a listen here and see what they're talking about. Actually, I'm going to focus on this for right now because it's closer to actually hitting our profit target. And that is obviously closer to hitting our stop, about 8 pips away.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
There's no, in currencies, if you're trading whatever, emerging market currencies against US dollar, against euro or something, maybe one of those goes under because the country gets taken over, some whatever dictator gets deposed. Okay, but if you're dealing in like the regular countries, unless a country goes under, right, that currency is not going to go away, and therefore they reversion, that's not even the word I want. They oscillate. They go up, they go down. Some of the moves are multi-year, but they're not something that you just buy and hold. There's no upward drift in them. So, but same with commodities. You sit on a bucket of oil, on a barrel of oil. What's it do for you as a barrel of oil? Nothing. If you refine it and use it, hey, then it starts doing things for you. But most of us aren't doing that. If your business is that product, it's one thing. But otherwise, just keep in mind that look at your trade, plan your trade, execute your trade. There's nothing in the long, long term that's going to bail you out. Hopefully some of that made sense. I went on for a while.
No, I think it made sense. Watching the open trade, obviously AUDCHF, it's retesting, it's rising. 20 MA on the 15-minute chart. Is this overly significant to just bring that up? I've probably mentioned that 2 or 3 times. Overly significant? No, but it is something in an uptrend you want to see hold. And now I'm talking about just a 15-minute uptrend. It's a short-term trade, so I'm focused on that short-term uptrend. And it's held previously. It held in this area around 7 a.m. Eastern. It held this area just around 9 a.m. Eastern. It's testing that right now. Obviously, we'd like to see it hold right now as it's an open trade and it's 10, 15, 10, 20, whatever Eastern. It remains to be seen. Right now, it's a skirmish. It's a struggle. Nice breakout, just couldn't carry, or at least hasn't carried so far. We see different performances among the cousins, so to speak. You have Aussie Yen still basing really nicely here on its 15-minute chart. You have Aussie CAD is moving higher towards its towards its daily high, which was in the last hour. Aussie Kiwi softening, Aussie Swissy that we're in softening at the moment. Aussie US is just trying to hold on this pullback. So it's a real mixed picture here all of a sudden for Australian dollar. Some benefiting, some moving up, some softening a bit. Definitely some change going on here as we're in our last hour. We don't really have any data of any significance, at least in this hour as we head towards 11 a.m. If you came in super late, you might not have heard me say we do have Reserve Bank of Australia rate decision tonight at 11:30 p.m. Eastern Time. Obviously a key item which certainly could affect the performance of these Aussie-based pairs today, now, in terms of just constrained activity, which would be negative. However, another data point to be aware of, New Zealand dollar, there's some dairy-related data at midnight or 12 p.m. tonight, 12 a.m. tonight, 12 a.m. Tuesday morning, however you want to think about that. Aussie CAD continues to shape up, as I mentioned. Let's take a look around here. One thing I mentioned earlier about these, we came in and earlier today, and these were up 0.5% each. And I said, okay, so the headline bullet point is CAD is strong. However, look at these pairs, CAD Swissy, CAD Yen, and we looked at them and I said the caution is that they're against the declining 20-day moving average in this area, these prior highs. And this is a concern. You have to be a bit skeptical of a rally that was up here when you have this declining moving average and these prior highs in that area. And this is now backed off and is up only 0.17%. Okay, I didn't see a great trade in there like I wanted to fade that strength. I mean, I was correct about that, but I didn't see a great trade there. CAD Yen, very similar. This was up over 0.5% or just under 0.5%, I should say. And we see also at its high, it was just slightly above the declining 20-day moving average. A very important prior high in this area that saw a lot of selling pressure off the high. And I said also, you got to be skeptical of that. And of course, well, not of course. In this case, it's backed off from the high. And that's why you look at the context. You look at the larger daily context. Okay, now the larger daily context in AUD-CHF is really positive, but this is not faring well at the moment. It's down about 10 pips below the buy stop trigger price, and breaking below that 20 MA on the 15-minute chart. We'll see if this can hang in there and stabilize. We've had trades before where the breakout fails and it goes and it ultimately just stops out. We've had other trades where they get off to a very slow start and they ultimately are able to succeed. So it's a mixed picture. Obviously, the odds decrease a bit when the breakout fails and it comes back towards the lows or middle of the range. At that point, you're a bit closer to your stop than you are to your entry. We're in the middle, but naturally, we want to see this shape up, see if it can hang in there after a promising base, really, really constructive all morning, breakout, and then just not able to do it so far. All right, so we're looking at a longer-term chart of gold here. Tag, you want to make some comments?
Yeah, so this is Handy and Harman. They're one of the oldest, biggest gold dealers out of London. Doesn't matter. That's why H&H. So this is weekly cash gold. And there's an example of commodities don't have to go up or down. You look at that, so back in, what was it, 1980 or into 79? When was that?
I think 1980 was the high.
I think it was 80 when the Hunts tried to corner silver, when all the metals went nuts. And so it hit, I think it was like 850-ish, give or take a few points when it peaked. And then what did it do? It crashed and it came back down. And you see that 400 line kind of goes across. We basically hovered between 300 and 500, 250, 350, somewhere, 250 to 450, something like that, for like ever. That was 22, 23 years, and then it finally broke out in 03, 04, you see it broke. The trend started earlier, but it broke out of that range, and then it took off, and then since then we've had a massive retracement. It hit, I think it hit 1900 or it hit like 1890 or whatever, and then it almost came down to 1,000. It came down to I think it was 1,040 if I remember right offhand, and that's a really, really big retracement, and there's nothing saying we can't go back down to 3,400, and nothing saying we can't go up to 3,000. Okay, commodities can do a lot of different things, but there's no built-in upward bias. When you see a 20-plus year period where something did nothing, that's a pretty good indication there's no upward bias, or downward bias for that matter. It's just, it's purely supply-demand. Individual stocks, strangely, there's a downward bias, but stocks in aggregate, there's an upward bias because the winners really win, whereas the losers kind of take a long time to lose all the way. But because again, you have people trying to create company, you build a business, you're trying to grow it, you have a sales team trying to grow it, they want to get their bonuses and stuff. There's a lot of things at play to try to grow those over time. You get a chunk of gold, unless the demand for gold goes up a bunch relative to the supply, gold stays at about the same price. And same with oil, same with copper, same with wheat for that matter. Wheat's a little bit different, the agricultural commodities, because, if they have a bad crop season, well, if demand stays the same, supply drop because there's a bad crop season, you're going to see prices go up, that type of thing. But all the industrial commodities, all the precious metals, there's nothing saying they have to go up or go down. Okay, and currencies are very similar in that way. In fact, if you overlaid like the Australian dollar or the New Zealand dollar or the Canadian dollar on this, it's not anywhere near exactly the same, but there's a lot of similarity in them. Why? They got revalued when commodities got revalued. So we had a big commodity bull market from 2002 to 2010-ish, and so those all got valued pretty hard. That's not the first time they've had that cycle, first time in a long time. And they'll probably come back down some. Well, not probably. They've come back down a bunch, and they probably come down more. But there's nothing saying that any given currency has to go up or go down. That was a main point from this, because you look at that, a 20-year period of flatness, actually down. You're down for over 20 years, because from the peak, and we talked about drawdown a bit in here, but if you draw that line from the peak back in 1980, it was until 2007 or 8, you were underwater the whole time. And that's even before inflation, so that's not even real terms. Real terms, you were probably underwater till about 2010. But you were underwater for 30 years there, 28 years. And if you're into that, if that's your thing, have at it. But that's not. I don't like that game.
And that's, and then it brings up a bunch of discussions. If one had this as a part of a diversified portfolio during that time, and you could still question the efficacy or the effectiveness of that, but that would serve one purpose as kind of
Right.
some extreme hedge. On the other hand, if that was your position looking for upside and you held it for any number of years during that time, with basically no substantial movement out of this range, then that's really the definition of opportunity cost. What's opportunity cost? Opportunity cost is when you're tied up, money's tied up in in one investment or another, you typically or possibly one trade or another, and you are attached to that, and you're missing other opportunities. So that gets a real negative stigma, opportunity cost. I mean, it's part of trading, but it gets a real stigma when you are unwilling to take a protective stop and just take your medicine, take the loss, and move on to something better. When you just persist in holding a loser, that can result in real missed opportunity because you get fixated on one thing. So usually, the classic scenario is somebody turns a trade into an investment. You started as a trade, you were just going to, make a quick few dollars, whatever the case is, and it doesn't work out. It goes underwater, so now it's a losing trade, but it's still open. And rather than having a clear protective stop and just getting out, one just persists and holds that, and then your opportunity cost comes into the picture. So, when I see that long stretch of flat or range-bound trading, and it's a decent size range, but have to be super skilled at picking the top and the bottom of that range, and recognizing when it's over as well. It's not too attractive.
All right, guys, we're not really talking about the trades that we're actually in right now. So I'm going to go ahead and just pause it. We have about, where we at, 10:30. They usually shut down at about 11 o'clock. So we have about 30 minutes to go. So I'll come back 10 minutes before they shut down the room. Hopefully this trade will have turned around. We're about 15 pips away from our entry price. So we'll just have to wait and see what happens here. All right, be back momentarily.
No, Aussie New Zealand's still up more. But this base, I mentioned this before, folks. I said if Aussie Swissy didn't meet entry and Aussie Yen kept basing like it did, maybe I'd switch to Aussie Yen. But Aussie Swissy did meet entry, and it just has been struggling, although it's looking a little bit better at the moment, but it's been struggling. Whereas Australian dollar, Japanese yen has broken out and looks perfectly fine, even though it's at a daily resistance point. So there's something about the yen pairs that just continues to look like the yen is vulnerable, and that we might see greater movement against the yen to the upside. All right, so just a run through of top swing ideas. Certainly anything in yellow has been a watch idea. We've discussed many of those as well. Haven't really discussed any. We really haven't discussed any of these pairs today, so I'll just switch over to the Kiwi. I find even though Kiwi is weakened, just generally against Australian dollar, for example, and we see softness. Well off the highs of some of these recent swing highs. You still have an uptrend in NZD CAD. You still have a daily uptrend in NZD Swissy. An interesting action right here. I mean, a really big bullish engulfing here in the Kiwi Swissy on Friday. I mean, that's pretty powerful. I had a couple of trend lines drawn for any of this action took place, and you see a test of those areas and a reversal with bullish engulfing on Friday. So I find, I also start to see the Swissy being weaker. And I know, Tag, you've talked about that in terms of the fundamental case for that, and maybe technical as well. But, I'm starting to see that a bit more also, like the Swissy and the yen might both be on the verge of weakening. But, I don't want to draw to dramatic conclusions. Nevertheless, powerful candle, even in Kiwi Swissy here. It's down today, consolidating, but in general looks good. Aussie Swissy weakening here as we just get close to 11 a.m. Eastern. Disappointing, but had a lot of good results lately, and if this has to be a loss, it has to be a loss. I will issue a target, however, before we wrap up. So we've just got a couple of minutes, but I will put out a target, folks. And
by the way, there's volumes in what he just said. He's like, yeah, well, and hopefully it's not, but if it's a loss, it's a loss. Because again, if you're doing risk management properly, you don't love losses, but you can take a loss, right? 50 losses in a row, okay, that's going to start hurting. 2 losses in a row should only be annoying. 1 loss in a row is just like, dang it, oh well, and then move on, right? On to the next one type thing. If 1 loss makes you freak out, then you're taking on too much risk. Your size is too big. You should be taking smaller size. So, just an idea.
Agree with that. Yeah, I will. I'll mute my mic, but I usually I say something unpleasant when I lose on a trade. And then I move on.
Yeah. Oh yeah. And some people say, "Oh, you shouldn't even be mad." It's like, yeah, they're crazy. I'm pissed when I lose on a trade, right? When you lose money, it's not fun at all. But you just move on because, like, if one, you shouldn't be taking on too much risk, so it shouldn't affect you too much. And then 2, if you let it affect you too much, guess what? All it's going to do is hurt your trading going forward and make you be in a bad mood. So just make it so no trade loses you so much money that you can't deal with it.
Yep, and just to tie in I won't belabor it, but the attitude of accepting the loss before you get into a trade, not that you plan on losing, all that stuff, right? But just accepting the fact that if you lose, you're okay with that loss, that amount of money, that percentage decline in the account, that enables you to trade more clearly. So this is just flirting, unfortunately, right with the stop area. Stop is 0 spot 74.45, and this is just fraction, like a pip and change, or less than a pip now away from it. So I'm about to issue a target, but I'm just watching this area first. Just got stopped. Yeah. So, all right. Well, no target will be issued for the trade that just stopped out, obviously. So that is roughly, Tag, do you have the log where you can just look at the
21.8.
21.8 pips. All right. So, try to keep the losses in that area, right? When the trades don't work out, that's about the amount that I like to see as a loss, right? I don't want a if I'm looking for somewhere often the 15 to 25 pip gainers, and with the occasional 30 or more gain, pip gain trades, then I don't want losers to routinely be 50, 60 pips, right? I mean, the math, maybe we can talk about math later. I could share an Excel calc. We could just look at different trading scenarios. That might be interesting to do, actually, and go through hypothetical track records of various trades and trade amounts and winning percentages.
All right, guys, so they just closed out the trade. Actually, I should say it just got stopped. Let's go ahead and take a look at that real quick. As you can see here, this red line is where our stop was, and that got taken out right here for $62.97 in loss. But we had this trade here where we made over 50 pips, and that was $105.50 for the win. So definitely up at the moment. Hopefully the trend will continue that way. As always, if you guys have any questions on the FX Simplifier, definitely send them my way. And we're basically just going to continue watching it over the week. Make sure you visit EmpireAmbition.com so you guys can follow it on a daily basis to see how things are going. All right, that's going to be it for this video, and I will see you guys on the next one. Definitely click the link below to get more information on the FX Simplifier. Take care.